What is going on, guys? We are back with another episode of our trade breakdown series. In today's video, I'm going to be walking you through step by step on how I generated an 88% return on QQQ puts this morning. I'm going to walk through my exact entry and exit process, as well as explain exactly why I entered this trade. If you like these videos, please don't forget to like, comment, and subscribe, as it helps out the channel a ton. Let's get right into it. All right, guys, so coming into this trade, this is going to be fairly simple and straightforward. What this was a liquidity trap at pre-market high and shorting the rejection of a failed breakout, right? So these are my bread and butter short setups, especially in a market like this. We are in a more range-bound market where range is not as plentiful, liquidity is not as plentiful. So what I like doing in these markets is longing failed breakdowns and shorting failed breakouts. That is just kind of my bread and butter system right now. And this trade today was a perfect example of shorting a failed breakout. So coming into today, guys, on QQQ, I identified we had some relative weakness on the Qs versus SPY because we had a lot of the banking and kind of energy names were strong this morning. Those have exposure to the S&P 500, whereas QQQ is obviously more tech heavy. I noticed Apple, Microsoft, a few of those names had some relative weakness in pre-market. So I knew I was going to be focusing on shorting the Qs rather than trying to short SPY because I wanted to attack relative weakness, not short relative strength, right? That is a principle of my trading system. So coming into today, guys, you really need one level identified here in pre-market, and that is going to be our pre-market high on QQQ, which occurred around 7:30 this morning, right at that 312.50 level. Now coming into today, QQQ actually printed a very strong 15-minute candle off the open. I was patient off that 9:45 candle, guys, and then as you can see on this 15-minute candle that started at 9:45 and closed at 10 a.m., we actually swept above our pre-market high here at 312.50, guys, but the candle got shoved down. You see how the candle closed below our pre-market high, and we have this long upper wick which extended above. What that is, guys, is a liquidity trap at that pre-market high level. That is where breakout buyers kind of get stuck because they're chasing that long breakout. The breakout fails, the candle closes below pre-market high, and what you have at that point is longs that are trapped in that trade. It didn't validate. The candle did not close above our pre-market high level. So off of that candle, guys, I was looking for an entry on the QQQ puts. I ended up looking at the QQQ 310 puts for tomorrow. So March 28th in this case, I gave myself 1 day till expiration in this market, obviously buying a little bit of time instead of trading the 0 data expiration. So off of this 10:05 a.m. candle, guys, I was looking for an entry as close as possible to that pre-market high level on those puts. Ended up taking an entry at this 312.20 area at 10:08. I alerted I was taking the QQQ 310 puts for tomorrow at $1.26 per contract. Coming back to the 15-minute, guys, in 1 second, but off of that level, guys, we rejected initially, so the trade started to go in my favor right there at that 10:15 time frame. It was basically even for about 5 minutes. And in this market, guys, I want to kind of emphasize I'm very proactive about taking gains in this market. I'm looking for 20-25% and, you know, take my money and leave kind of market. That is just the environment that we're in right now. So as soon as we got that rejection off 312, we flushed down towards the 311 spot. I knew that my first target on this trade was going to be that pre-market support area at 310.88. I sold about 25% of my contracts there, guys, at this 311 spot. We started to really fade down sub 311, guys, and towards that 10:30 time frame, I actually scaled about 60% of my contracts at $1.52 per contract, so $1.51 and $1.52 per contract. I scaled about 60% of my contracts there, and then like I said, guys, I left some runners to run, right? So key here, we broke that pre-market support area at 310.88. And at this point, I am not looking to hold a full position, right? It is just not the type of market we're in. We're not seeing heavy continuation in this market. So at this point, guys, I'm 80% out of the trade, and I'm just looking to hold a runner or two for a move down to kind of my reach price targets, which in this case was that 309 area, right? And on QQQ, guys, you can see how we started to come up. We started to turn this area, which was support at 310.88, into resistance. I was still holding one runner at this point, guys, and then I ended up covering all of my puts at this 309.30 area for an 88% return on those 310 puts. Ended up selling the last contract for around $2 $1.20 per contract. So from 126 all the way to 220, guys, this was an absolutely fantastic short trade this morning. Just to look at it on the 15 minute so you get a better idea, you can see right off of that pre-market high liquidity trap, we actually faded down really nicely, guys, all the way down to this 307 area. I did not hold puts for the entire way down, but I closed, like I said, on this long wick down towards that 11:15 time slot. Like I said, in this market, guys, that is more than good enough for me. And this is a very simple and repeatable setup that I can kind of implement each and every day. And it is my bread and butter in this type of market. So I hope this video kind of helped illustrate why I took this trade and kind of showed you, an inside look into my process and how you can repeat this yourself. If you like these videos, please do not forget to like, comment, and subscribe, as it really does help out the channel a ton. And I will see you guys on next week's episode. Peace.